Welcome, everybody, to today's webinar. I am Peggy West. I'm the event organizer. Today, we are going to hear from Dr. Thomas Engblom, and he is with First Citizens Bank on Association Loans 101. Loans can be complicated, and I was thinking about this when I was preparing what I was going to say, and I thought, this is scary, even as a person, individual person. You go to the bank, you have to have all your facts, you want to know what's going on. Today, he's going to explain the association process of loans and how to be prepared. So hopefully you will get a better understanding of how to process the loans, how to qualify, and be sure and put your questions into the Q&A box, not the chat box, if you have any questions today. They will be recorded, and following the class, if they all are not answered, he will get those and he will respond back to you in a private email. This is really designed to hopefully help you make an informed decision. So I want to thank everybody that's on today, especially the volunteer board members, for being so vigilant in learning more about how to process loans and what to do for your communities. I want to thank the CAMs for your support in the webinars, continued support, many of you. Also for being the support to your communities and your board members. I know it's not easy, and we have a special thing for you today that Tom's going to share with us. It's all about doing your diligence, so please take notes. The recording will be available following the class. I'll send it out to everybody, and I will also be sending out the sponsor sheet. So let me thank our sponsors for today. I want to have them all introduce themselves, and I'm going to start with Vinteum Software today. Vinteum is the wind beneath my wings. I have Laura on today. Laura, tell us about yourself and what does Vinteum do for associations?
Hi, Peggy. Thank you very much. Hi, everyone. My name is Laura. I'm a sales executive here at Vinteum. We specialize in online platforms like websites and residence portal, as well as providing services to HOAs, condominiums, cooperative associations, as well as property managers. Since we're going to talk about, money and it's already budget season, we would love for all of you guys to know that our services and our software is extremely cost effective. It will be a definite investment that will optimize your daily tasks as a board member or as a property manager when it comes to communication with your residents, storage in important documentation, complying to Florida law, managing invoices and finances, and pretty much will be an all-in-one platform. Also, we're just, 2 days away from November, meaning holidays are coming as well. And just letting you know here, Vinteum, we do not only have a Black Friday, we're actually gonna have a Black November. So for those who are looking to get this type of services we provide, we have a great promotion happening in November that will not only help you guys with, again, optimizing your tasks, but also to save a lot of money on your budget. So if you want to know more information about our services and about this promotion we're having, we're going to send our information through the chat. And so you guys can have a, little call with me and get to know more about what we offer, okay? Thank you very much.
Awesome. Very good. All right. Next, I want to introduce Bob Aleka. He's the Vice President for Community Services at Faster.io. Bob, tell us about yourself and what are you doing for the communities?
Thanks, Peg. Good afternoon, all. Bob Aleka here with Faster.io. We provide streaming television and internet through our fiber optic infrastructure. We've been doing this for over 22 years, building, managing, and maintaining most of the fiber optic infrastructures for most of the providers here in Florida. You get the backing of our data center. It's a tier 4 data center, which we have hundreds of companies in here that we provide and service as well. Our streaming TV allows you to take it with you anywhere in the world and change your address, get your locals, as well as you'll get 20 streams, meaning you can have 20 TVs or 20 devices going at the same time. Internet speeds are both symmetrical up and down. We can provide endless amounts of bandwidth depending on what you're looking for. And no property is too small for us to take on. So if you're looking for a proposal or for something that's just to get some information, please give me a call and I'll put my information in the chat. Thank you.
Awesome. Thank you so much. All right, next I want to introduce Diana Alert. She's the Senior Business Developer over at Best Roofing. Diana, tell us about yourself and Best Roofing. Where are you these days?
Hi, everyone. Thank you so much, Peggy. I'm the Director of Business Development, but I've been with Best for like 6 years. The company's been in business for 47, and we cover Florida. So if you need anything, even from a residential, now we do that as well, to commercial building, industrial, high rises, and we do from little to big, from a repair to a big project. So specialize in big projects like high rises and difficult projects that other companies cannot do. So we'll be more than happy to help you with that. We also do maintenance programs and many other things on your roof. Even if you have a question, please come to us first. We want to be sure that you make an educated uh decision. Be sure that you are taking the right decision on your roof because it's a big investment. So if you need anything, I'm going to put my information on the chat box. Thank you.
Very good. Thank you so much. And thanks for your sponsorship. Next, I want to introduce Shelly Rovner. Shelly, she is driving, so I'm not sure if she's going to go live here, but Shelly is available. She's with Munyon Painting and Contracting out of the East Coast of Florida, but they do cover the whole state. Shelly, tell us about yourself.
Thank you, Peggy. Hi, good morning, or good afternoon, everyone. I'm Shelly Rovner. I'm project manager, marketing, and event coordinator for Munyon Restoration and Painting. We are third generation owned, 75 years in business, and we, like Peggy said, cover the entire state of Florida. We specialize in high-rise, condo HOA. We do painting, waterproofing, and electrostatic painting on metal surfaces. So if there's anything at all that we can assist with, please give me a call. Thank you, Peggy.
Absolutely, and thank you. All right, next I want to introduce Siobhan Gonzalez. She is with United Professional Engineering. Siobhan, tell us about what you guys are doing here for the industry.
Hello, everyone. Happy Thankful Thursday. Yes, Peggy, thank you so much for that introduction. We are a full-service structural engineering firm. So we support high-rise communities from, mid to high-rise. We have been serving South Florida in condominiums for over 20 years. So we specialize in all things milestone, recertification, phase 1, phase 2, concrete restoration and repair, pool decks, painting, waterproofing, all of your engineering needs, including reserve studies. So we want to be that resource for you here at United Professional Engineering. If you have a question, if you have an upcoming project that you're not sure about and you just want some guidance, we are offering everyone on the webinar a complimentary consultation. So make sure you reach out to me directly. Can't wait to meet you and enjoy the webinar.
Thank you, Siobhan. I think if you would mind mentioning Carmelo, what his designations are and what makes you guys different.
Oh my goodness. Yes, I'd love to share. It's very important. Thank you so much, Peggy, for bringing that out. So set apart, our president and owner, Carmelo Giglio, he is the standing president of the Florida Structural Engineers Association, two-time elected. He was also appointed by the governor to go to the Surfside tragedy, post-tragedy, assess the situation, and Carmelo helped write the new legislation to protect associations and prevent tragedies like that from happening again. So we have a big emphasis on our firm regarding education. We are built on integrity. We are here to serve, and Carmelo is that authority and pillar in the industry. So we're happy to connect. You have any questions regarding engineering, we're here for you. Another way we're set apart that's very important when you're considering an engineer is we offer project management services. It's already included in all of our services that we offer. So there's no need for additional finances to hire out. We're here to serve in that way. We also offer owner's rep if you are already under contract. So please reach out to me directly with any questions. I look forward to hearing from you.
Okay, great. Thank you so much. All right, next I'd like to introduce Kaiser Air Conditioning. We have Ruthie on today. Ruthie, tell us about how you specialize for the association services.
Hello, everyone. Thank you, as always, Peggy, for all you do. I am Ruthie, and I'm the marketing director here at Kaiser Air Conditioning. We are locally owned and operated. We are not owned by private equity. I want to emphasize that locally owned and operated it really impacts the quality of service that you can expect from an AC company. For 20 years, we have been serving Broward, Palm Beach, Martin, and St. Lucie counties, and we have a lot of experience working with property managers and engineers on site, whether it be a condo or a residential community with multiple buildings on property. We are open every single day. And as we get into the holiday season, I want to emphasize that that's 365 days a year. And we have anywhere from 20 to 30 technicians out on the road at any given point. So we have the team and the resources to service the same day. We consider anybody here on this call or in this webinar to be a VIP, and we will customize any sort of plan that you need. So if you have a condominium and units on the roof, we are able to service those. If you have a resident on your property that needs a recommendation and you send them our way, we do provide an incentive for that referral as well to you directly. So I'm your main point of contact. I'll drop my information. Please do not hesitate to reach out to me if you need anything related to your HVAC systems, and have a fantastic weekend, everyone.
Awesome. Very nice. Very nice, Ruthie. Okay, I have a few sponsors that are not on today, but I do want to make honorable mention of them. I'm going to start with COA Solutions of Florida. This is a very experienced and accommodating broker for the association industries for insurance. So that would be Daniel Baum. Next, I want to introduce PD Concrete. Daniel Pena is the owner. He's been around for a very long time, over 20 years, right here in West Palm Beach, Florida, but servicing mostly the East Coast, specializing in concrete restoration. Next, I want to mention Hafer Company. It's a full-service CPA firm that does also auditing. Nicole Johnson is your contact there. 4 offices around the state, so they are covering the entire state. Next, I want to introduce Dawn Miller. She is with the Paving Lady, another very influential company, professional company in the East Coast area, working out of Boynton Beach, Florida. And the owner has been in business over 35 years. So the Paving Lady is great for all of your paving needs. Next, I want to introduce Allenac Railings. They are manufacturers right here in South Florida for everything around the state of Florida. They do new manufacturing, they install new railings, and they also repair. So anybody need any help with your condo railings, very important safety feature, please call them from the sponsor sheet. I also want to introduce Velocity Services Group. They are a large loss restoration company. Thankfully, we haven't had issues this year in Florida with the hurricane season, but if something comes up, you need them. They have a VIP plan to have them come out to your property, do a observation, and they will give you a writing proposal of what they will do for you at the time if you should need them for any large losses from disasters or catastrophes. Lastly, I'll just mention that I have started a new website, FloridaCondoVendorsForYou.com. I'm trying to connect my guests here that are on today with my sponsors primarily. And if you just want to go there and check it out, I'd appreciate it. So before I turn this over, I just want to mention this is a 1-hour CEU credit. It is an IFM and an operations credit. This is going to be posted within 2 weeks after this class. Please put your questions into the Q&A, not into the chat box. We record the Q&A, and we will, like I said, answer as many as we can. Lastly, I just want to mention that I will send out a sponsor sheet with everyone's contact information. With that, I want to turn this over to Jayme Gelfand with First Citizens Bank for today. She is our moderator. Jayme, I'll let you introduce yourself and turn it over to Tom.
Thanks, Peggy. Good afternoon, everybody. My name is Jayme Gelfand. I'm the Regional Sales Officer at First Citizens Bank. First Citizens is a 125-year-old top 20 bank. We, in the CAB Community Association Bank Division, are able to provide lockbox to management companies, self-managed associations, FDIC protection, and loans. So today I'm pleased to present our loan class, and our educator today is a teammate of mine. So without further ado, I will introduce Tom Engblom, respected in the association management industry, holds a PhD in organizational management. His academic background, combined with his extensive professional experience, positions him as a knowledgeable leader in community association management. His doctoral studies likely focus on the intricacies of management practices, organizational behavior, and effective governance with community associations. Under CAI, Tom holds many designations, such as Certified Manager of Community Associations, a CMCA, the Association Management Specialist designation, AMS, and Professional Community Association Manager, PCAM. He's also a certified property manager and accredited residential manager, both through the IREM Institute Real Estate Management. He combines theoretical insights with practical applications, enhancing his credibility and effectiveness in the field. Tom's contributions to the industry include research, workshops, motivational lecturing, and consultations that address the evolving challenges faced by community associations, making him a valuable asset to homeowners and fellow professionals alike. If you need more specific information about his work or contributions, please contact him. Tom, happy to have you today.
Thank you for having me. I appreciate it. Thank you. You made me sound very knowledgeable and informative. The other comment that Jayme didn't add is 4 years ago, I'm originally from Illinois my whole life, and I served as a supervisor in Chicago for 20 years, supervising all the big buildings in Chicago. And then for the last 21 years, I've been working for the bank. So I've been in the industry for 41 years. I started when I was 3, so I feel very well aged for that time. But 4 years ago, unfortunately, I was at a property down here that my wife and I invested in, and they found out my background, and they said, anybody that wants to serve on the board, please step forward. Well, I didn't move, and they all stepped back. And I just got reelected for the 3rd term as president. So you would think after all these years, I would be knowledgeable and not be a part of the association, but I love giving something back. So I lecture, I teach quite a bit. I write books about things of this type. I've been a university professor, I still am. I taught at CAI and national level. So I like having fun when we do this. Hopefully my corny jokes won't offend you and you'll get something out of it. And we'll make it very, very simplified that you'll be able to understand everything about association management. And again, when I started 41 years ago, obtaining a loan for an association, you never heard of it. It was just common. Now, today, it's just common practice. And again, today is the eve before Halloween, so I thought we'd add a little humor to it with Halloween and that we have to keep it professional. And this is probably what I'm going to be dressing up tomorrow for Halloween. On a motorcycle going around trying to trick or treat, or trunk and treat, I guess you would call it. So we get into this, and there's information here. Again, we're part of the CIT, a division for citizens, and essentially what these two slides are saying is that this is based on my opinion, not the bank's. This is done by a lot of research and information and a lot of historical data that you get into. One of the things that I'm about is all about networking, as Jayme said. And what I would like you to do is, if you get a chance, I'm very goal oriented, obviously, with all the designations and degrees I have. But if you have an opportunity, connect with me on LinkedIn. I'm up to about 30,000 or close. And normally, if I would teach this class in person, what I tell everyone to do is take a minute and take a selfie of themselves or of your group if you're together. And what will happen is you'll see how you feel now. But at the end of this class, you're going to be very joyful, very happy, and just enthusiastic with what you learned. Now, one of the components that I say is that we all believe in charities. And today I created a charity and it's called Tom's Charity. And we have to do this on the honor system today. But if you look at your phone during the presentation, you have to Venmo me $20 because it's important that you pay attention and try to get something out of this. So be on the honor system and get through this. This is what Peggy was actually saying, that we have a video here that we're going to share with you.
Got a BA at the university, saw a job listing, thought, how hard can it be? Manage HOAs, get my foot in the door. Little did I know what I was in for. 201 has their TV too loud. There's a party upstairs and it's drawing a crowd. The ice cream social just ran out of soup. The guy in 4X doesn't pick up his dog's poop. I'm a condo manager. They throw everything my way. I'm a condo manager. My nerves, they try to fray. I'm a condo manager. I do this every day. I'm a condo manager. Should update my resume. Every day with these people. And there's cliques and there's clubs and there's whispering stations. This isn't an office, it's a police station. Meetings are more like babysitting, breaking up alpha males and ladies who knit mittens. Accounting, math. My head's full of knowledge, but I'm scratching my head thinking, for this I went to college. I'm a condo manager. Throw everything away. I'm a condo manager. My nerves, they try to fray. Now maintenance called and we have another caper. The clubhouse was robbed of all the toilet paper. Then the TV remotes were under attack. You'd think AA batteries cost $100 a pack. There's no lights in the lobby because the bulbs are all taken. Caught the dude on tape. He said, you must be mistaken. The camera doesn't lie. There's a fine and a report. I'm calling my lawyer and I'll see you in court. I'm a condo manager. They throw everything my way. I'm a condo manager. My nerves, they try to fray. I'm a condo manager. I do this every day. I'm a condo manager. Time to update my resume. I'm a condo manager. A boa constrictor can be a comfort animal. I'm a condo manager. Why can't I shave my back in the pool? I'm a condo manager. I'm not one to complain, but I'm a condo manager. I think you are. I'm your boss. I'm a condo manager. Neighbors love me. I'm a condo manager. Can you hang up my flyer? I'm a condo manager. These windows are really streaky. Definitely a
So that is a very good friend of mine. She's a comedian in New Jersey. And believe it or not, she did it on the very first take. It only took us about 25 times to rewrite it. But I hope you enjoyed it. Hope you're not offended by it. I'm sure we've all lived through that in one time. So a lot of words are based on the Latin meaning that you have. So I always throw this in there because I think it's somewhat amusing. What does amortization mean, or amortize? And when you look at this for a moment, Latin term says that it means to kill off slowly. So when they amortize a loan, they're killing you off slowly. And it's all based on the payments that you have and what it's going to cost over time. And when you get into this and you look at everything, again, this is a little bit of humor that we have, and it probably comes across better in person, but how many times does 5 go into 25? Well, this is from an old comedic strip, and basically it comes out to 14. So how you work the math is if you take 5 times 4, that equals 20, you have 5 left over, that equals 25. And how I can support my math if you go 4, 8, 12, 16, 20, 1, 2, 3, 4, 5, 25. So it's all about presentation. It's all about how you perceive everything and how you look at how you're trying to understand what's going on with the loan. And going back to years ago, some of us were around. David Letterman created the top 10 list, and I'm a big proponent of the top 10 list. So what we're going to do is we're going to go through these top 10 reasons why communities face financial hardship. And I will say this, being from Illinois, they came up with manager licensing probably about 15 years ago. It's not as proactive as it is here in Florida. And I do a lot of teaching across the country. But if you're a manager or a board member, you are definitely light years ahead of the curve in Florida. You have to give yourself a lot of credit. You almost have to have a paralegal degree with everything that's going on with reserves and SIRS and everything else. So here's number 10. Board members, they don't understand their fiduciary duty. And I've done many seminars where they call kicking the can down the road. And fortunately, because board members do that, or managers, that's why Jayme and I have a job. And a lot of times, if they would follow just common sense, when I teach, I say to people, don't be smart, be logical. But remember, you're trying, it's not a sprint, it's a marathon. So the example that I give, I lived in a small condo in Illinois, only 8 units. Why I lived in that condo for 17 years because I had a job at the bank and I traveled quite a bit. And I didn't want to have the maintenance of a house. And of the 8 units, 7 of them were women, and they were all 75 years of age or more. And they got me on the board, and I said, well, let's increase reserves by $25 a month. So when we need a new roof in 5 years, we don't have to special assess. And what was their comment? I can't afford it. I'm on a fixed income. It's too much for me. Well, 5 years later, when we each needed $5,000, they all wrote a personal check. People don't want to give up their money, and they have to understand that they have to contribute. And it's kind of based on the green banana theory. If you heard that, you buy bananas for longevity. People don't want to put money away because they don't think they're going to live there that long. And recently with this, I'm kind of a little upset right now that my son broke up with his long-term girlfriend, and she was an FBI agent, and now I call her FedEx. So we need a drum roll on that. Anyways, to go on. Number 9, they don't have an investment policy. They don't know what FDIC protection is. And I'm a firm believer in creating a lot of acronyms to remember all this when I teach. One of the acronyms that I talk about is SLI, safety, liquidity, and yield. So safety is that your FDIC limit is $250 per tax ID per bank account. Now, a lot of associations may or may not have more money than that. And if they do, they're not FDIC protected. Now, if you look at the banks, such as like First Citizens, we're over a $300 billion bank. I don't think that we're going to fail anytime soon. But as a board member, as a manager, you never want to be criticized by the accountant or by other unit owners that you're not FDIC protected. So what they do is they have other programs out there called Intrify, where you can invest in Cedars up to $50 million, or you can do ICS, which is a liquid money market to invest in. Liquidity is just nothing more than you do not want all your funds in CDs because you may need some money in return. It's just another name for investment. So this is another reason why they face financial hardships.
Tom,
And
before you go on,
yes,
Tom, when I was a manager, I had a board member who wanted to invest the money in the stock market. I was like, oh my gosh, we're not going to do that. That is not your fiduciary responsibility. Yours is for the safety of the funds,
correct.
not maximizing anything. It's just to make sure that those funds that all of the unit owners are providing are kept safely and that a good investment policy, to your point, is being made.
Correct. I mean, typically within the governing documents, it says that you should have an FDIC protected. And
Yes.
there was several legal cases, ironically in California, where boards did invest and they lost that money and they were held personally responsible for that. So that is true. FDIC protected. And again, I'm a firm believer you have to deal with experts. Call the attorney, call the banker, the insurance person, all the great companies that introduce themselves. That's what you have to do. And I talk about, and you've heard so much about reserve studies, and we heard about Surfside and the engineering company. Is think about a reserve study as being an insurance policy. So again, every time that I manage the property or supervise it, however you want to define it, I would turn around and the very first question I would say, do you have a reserve study? And if they would say no, that would be the first component that I would require them to get because I personally never wanted to be blindsided. I wanted to be able to fund and make sure that the association had enough money. And when I became board president 4 years ago, that's the very first thing I did at the property. And when we started to follow the reserve study and increase the assessments by over 20%, people were livid. But now, 4 years later, they're very happy. So when you fund reserves, you actually have three ways well, actually 4 ways that you can fund reserves. One is called statutory, which is required by the state statute. The other is what they call baseline, which is right above zero. So the reserve study requires 100,000. You only have maybe 5,000. The next one is called threshold. And with threshold, you may have 50,000 out of that 100. And then full funding, you're following it 100%. Jayme and I do not like baseline, or Jayme and I like baseline and threshold. Because if you have that, you're either going to need a special assessment or you're going to need a bank loan. For full funding, you're covered. But again, how many associations full fund? And again, I've done many, many topics about how long can I kick the can down the road? We don't want to put money away. We know we need a new roof on. Let the people in 5 years come in. We don't care about that. We don't care about the concrete. We don't care about the beach entrance. We don't care. We're just going to kick it down the road. That makes it bad. And then what is the other big issue here? Insurance. Insurance is astronomical in Florida. But if you know how to navigate the process, you can add certain components to this. For example, here's a great example. Personally, we put in over 50 cameras in our property. Why did we do that? Because I knew if we put in cameras, it would reduce our insurance costs. And it saves the association on an annual basis $100,000 a year because we can reflect if someone gets hurt or what happens. So these are all other components why associations just face financial hardship. And again,
Before you move on, Tom, one of the good things that came out of the milestone reports from a bank's underwriting perspective is in the past, they were only looking at the loan request for the project being presented to them today. Now, with the milestone studies, the underwriter is actually looking and calculating at what jobs, what projects need to be looked at and calculated into the next 5-10 year future. So they and us are able to help guide that association to say, you maybe need to cut out some of the fluff you're adding because it's not just this project. You have numerous projects coming in the horizon.
Very important part. Thank you. And again, I cannot emphasize this enough. You have to deal with your counselor, your banker. You got to have that professional in there. You got to have RFPs completed. You got to have a project. You got to define all that. That'll make a difference on why you will be able to assist in trying to get things done. The big issue too, think about this. A lot of people, here's where many associations fail. You're running a business. And again, where I'm at, it's a $3 million business. And you can't have favoritism when it comes to everyone. You have a fiduciary responsibility. And I can tell you 4 years ago, when we took over, we had over $100,000 in delinquent assessments. And the very first thing that we did was we got a very aggressive attorney and we went after them. And now our delinquency, we pay on a quarterly basis. And now we only have probably about $6,000 outstanding. Very important that you have a collection process, because you're going to learn later that a bank, typically in our case, we're going to use that delinquency as a benchmark on if we can give you a loan or not. And then again, you always heard this, robbing Peter to pay Paul. Many associations try to do this. They put money in reserves. They don't have enough to cover it, and they're operating and they borrow against it. In many, many states, again, I've covered over 7 states in the Midwest, and now I cover the Panhandle of Florida, but many states have enacted laws that you cannot borrow from your reserves, and that's a critical component that you have. Unforeseen expenditures. Think about the what if. What can go wrong? What about that pool pump that went out? What about an elevator? What about a motor on the elevator? What about a water pipe break? These are all things, again, that you have to look at and be prepared for the unknown. And that's the benefit of having a reserve study. That's the benefit of being proactive. That's the benefit of having a surge. Because again, you don't want to get hit with all that money at one time. You want to be able to go after little by little to be able to cover it. And, years ago, when I used to teach the finance class for CAI, this is probably over 15 years ago, and I would teach here in Florida. Florida was notorious for waiving reserves, and people would always special assess. And again, where I come from in the Midwest, we're totally opposite. We reserve, we reserve, we reserve. And a lot of times, if you have a special assessment, people can't afford that. And then what does it do? It increases the delinquency. Some units may go into foreclosure, and then you run into a whole different scenario of the reasons why you can't get a loan. And again, the manager, I have a lot of respect for all the managers that are in the industry. Think about the entire United States. There's only 65,000 managers that are out there for the number of associations. And Florida isn't even the number one state in the union for associations. It's California, but you're a close second. But the manager tries to tell you, we need to put money away. We need to put money in the reserve. And what happens? The board unit owners have an issue with that. They don't want to put money away. And think about what you're going to see in a little bit, how the amount of money that you put in the reserves is going to have an effect on your bank loan. or what your assessments are going to have an effect on the bank loan that's out there. Unforeseen. What about the recession? You know, everybody's talking about all the tariffs and how that had an effect on everyone. But what's the big issue here in Florida? Insurance, insurance, insurance. Now, it should be a soft market and it should be going down this year. And that's what everybody's hoping to have done. Top 10 reasons why you can't qualify. Well, these are very self-explanatory in itself. And think about this. In fact, again, I'm going through it personally right now. We are rewriting our governing documents. The documents are 20 years old. And being a banker, actually going through this right now, one of my clients here in Florida, they took over, and this is just kind of mind-boggling. They took over an association, and their TIN number, tax identification number, is incorrect. They can't open a bank account because they have the incorrect TIN number that was filed 15 years ago. Now they have to go through all these different hoops with the IRS to get a Form 147C, which could take months, and in the meantime, they're in limbo. Your articles of incorporation may be expired. Maybe your bylaws are not accurate. All components why you would not be able to get a loan. And again, think about this for a minute. Now every association is going to be unique and different, but I can tell you, for example, in Michigan, if they need a bank loan, they need to get 67% of the ownership to agree. What do your documents say before you try to go out and get a particular loan? Pending litigation, do you have a construction defect? Is someone suing you? And we're not talking for minor issues, maybe a slip and fall. We're talking something major that's occurring. This could prevent you from getting a bank loan and create a problem for you. You don't have any idea what you need to do. You haven't hired an engineer. And again, I always use this scenario that I talk about. When I first purchased the association, the board president called me over for lunch and gave me stacks of information on which elevator company to pick. And he wanted me to pick it based on my knowledge and expertise. And what did I do? I pushed it all back to him and I said, here's 3 elevator consultants to call. It's an insurance policy. Make sure you do it right. Make sure you have the right company come out there and draw up the RFP, bid it out, get the best bid, and we're going to pay an elevator consultant to supervise that and have the work done. Very important that you do that.
Tom, before you go on, one of the things that I always encounter is sometimes people will call me and say, I need a loan for $2 million. I'll go, how did you come up with that number? I don't know. I just think that that's what we can afford. So that is definitely not the right way to start looking at obtaining a loan. To your point, you have to engage the professionals first. You have to engage that engineer or architect and have a scope of service created. You don't need to have all of the projects outlined and contracted for prior to applying for a loan, but you do need a good baseline of where are you going and what are the actual needs of the project. The other question I sometimes get from people who are calling me, well, I need to know how much we're going to be approved for first. Well, that's not the right avenue to follow either, because
Right.
you have to define your projects. And then if the bank loan doesn't support what the projects needed are, then you're going to have to work, to Tom's point, with your professionals, your manager, your attorney, because then you're going to have to do a special assessment and prepare a special assessment up front that may cover that shortfall.
Very, very good point. And while you brought that up, let's talk about this. So every bank has their own procedure and requirements to get a bank loan. At First Citizens, we're very, very fortunate because we offer two products. One, I use extensively, maybe Jayme does too. It's called a quick term application. And what happens with that, it has a loan calculator built into it. You have 8 to 10 questions you have to answer. And then you plug in the number of units that you have, what your annual average assessment is and or special. And with that particular product, you need to be under 8% of the total number of units 60 days or more. And it'll give you an option of 5, 7, or 10 years. Of course, you always want to go with 10 years because that will qualify you for the most. And the name is what it states, quick. Within 3 weeks, we can fund that project. And there's a minimal cost for that of $500. Now, if that one doesn't work for you, because it only goes up to 3 million, but if that one doesn't work for you based on what Jayme stated, that you need to know what type of work you're doing, then we go with option 2, and that's a standard loan. In a standard loan, they're going to look at full underwriting. And one of the components that they're going to look at is the reserve study. And they want to know what additional items that you're going to have to pay off or complete between now and the payoff of the loan. So if you get a 15-year loan and you need a new roof in 10 years, are you funding for that? And the bank may require you to increase your assessments and or special. So in one particular case, I had a very large association in Indianapolis, Indiana, and the previous board had got a loan, and it was a $5 million loan. They were doing all this. Well, part of the requirement was that they had to increase their assessment by 5% every year during that term of the loan. Well, the new board came in and they never did that. And I had to go to the annual meeting and tell everyone, here's your choice. Either everybody writes a check today for, I think it was $2,000, or we're going to call a note due. And if we call a note due, now everybody's got to pay $15,000 or $20,000. So that ties into what Jayme said. And this is the other critical component. The numbers have to work out. So if you have a special assessment, you're going to need it during the duration of the financing that you have. You just can't have it. I mean, and typically what you do when you special assess, let's talk about that for a moment. Let's say that everybody's cost is going to be $15,000. Well, you give everyone a choice to write a check today for $15,000, and then they're done. They don't pay interest, or the people turn around and they amortize that over 180 payments, 15 times 12. And what I always suggest is that if they sell their unit, they prepay that balance off and they give it to the bank and reduce that payment, because that new buyer coming in will be free and clear. So as a seller, you should be able to get more for your unit, because you can say, look, we have a new roof put on. We painted the building. We've done all these improvements, and you won't have to worry about it for 15 years. So just another thought. And again, look at what can your ownership afford to pay. So in certain situations, we've had units valued at $150,000, and the special assessment is going to be $100,000. Well, the bank isn't going to support that because too many people can walk away. And I mean, I've done loans where the assessments are more than what the value of the units are. So the bank has kind of backpedaled and said, you have to come up with half of that money first, and then we'll fund the other part. But think about how much financial burden can you put on people to pay, and will it support them on the return? And in that one case where that happened, they basically double the value of the unit by doing that special assessment. And that the units were about 400,000, and everyone had to come up with 150,000, and the units went up to close to 1 million because basically they rebuilt that particular property. Burden is too much; they can't afford it. It's like the saying, "Pay me now or pay me later." And that's why people are becoming more and more sophisticated with looking at associations to see what they can afford to live in, what type of work has been done, if there's a reserve study, how much has been addressed. All those different components tie in to trying to get a bank loan. What the bank does, personally, in my opinion, is very, very simple because it's the numbers. The numbers work out. And if they work out, where are we getting that from? We're getting it from the board, we're getting it from the financials, and we're actually getting it from the management company. And just to keep you awake, everyone know who that guy is on the right? If you don't, that's Mario Andretti. And I feel like I'm 6 foot next to him. But I guess you have to be small to drive a race car, huh? Multiple units. Here's a big issue. If you have one individual that has many, many units, could be depending on the size of the association, it could be as little as 5, it could be as many as 50. And the concern that the bank has is that maybe that developer or that owner, that investor doesn't want to pay. And if you get an individual like that, what's going to happen? The bank isn't going to be able to service the loan. High rate of investors, again, renters take it differently. You may not have people, what if they don't pay their rent? Then the investor can't pay his portion to the association. Very, very concerning. Again, let's go back to high delinquency, percentage of units, 60 days or more. How are you going to enforce it? Do you have a legal action? So what the bank does and how they set this up is they set up an ACH, and every month we pull that money from your bank account. And what happens is if you don't make that payment, part of the legal requirement, we don't take, the association has nothing of value. And let me clear that up. The questions all the time, I'm a board member, am I personally liable? No, you're an officer of the corporation. Do you put a lien on the property? No, we record a UCC showing that there's a outstanding loan on that property. Well, what are you pledging as collateral? You're pledging the assessments as collateral. What does that mean? That means that if you don't pay the loan, the bank has the legal right to come in and get that payment. In the 21 years of working at the bank, that's never happened. Have we been close? Absolutely. But that is the collateral that we have at the association. Okay, term of the loan. The term of the loan is just nothing than the duration. So it could be 5 years, 7, 10, 15, depending on the bank. And then you can have what they call a straight term or draw. So for example, when I said that we have a quick term, that's a fixed rate for the duration of the 10 years. We have another one with the standard loan that we can give you what they call a draw period for maybe up to a year where you pay interest only. Then it resets to a term. And if you get a 15-year loan and you get a 1-year draw, now we're amortizing it for 14 years. So what happens? We do what they call a 10-5. And what will happen is it'll be fixed for that 10 years and then reset after 10 years at a new rate, whatever that is. You'll always have a floor in there that it won't go before that or below that. And with that, and it's all about statistics and numbers, right? So if you get a 10-year, you pay it off in 7. You get a 15, you pay it off in 11. Prepayment penalty, basically, our
Before you go on, Tom, I just want to make a comment that nomenclature at banks are very different.
right.
Some banks call it a line of credit terming into a loan, and we have it what we call an upfront interest only period. So understanding when you're getting term sheets from different banks, understanding the different nomenclature so that you're actually comparing apples to apples. Our interest rate, for example, locks at the date of closing. If you're doing a line of credit to a term loan, you may have two different interest rates, which then makes it difficult to pass your special assessment because typically your special assessment is passed up front and it's calculated at a certain interest rate. And if you're using a line of credit, which is a variable rate, not a fixed rate, all of those nuances need to be taken into consideration in your minutes.
And we could talk all day about some of this where you talk about rate. People always look at rates. Don't look at rates. Rates are just a process that you go through. Some people, yeah, I mean, I've seen associations that they get a balloon loan and they get a balloon loan for 20 years and the rate's low. Well, now in 20 years, they don't have enough money to cover that. And you have to look at other components like loan origination. What is loan origination? That's a percentage that a bank can charge to get a lower rate of interest for you, but you're going to pay a certain amount up front. So for example, if you get $1 million and the loan origination rate is 50 basis points and bankers use basis points as terms, what happens then, they turn around and they charge a fee for that. So 50 basis points of $1 million is $5,000. And that's money to get a lower rate of interest that you have for an association. So you have to look at all this application process. Every bank is different. Our quick term, you only have to provide 3 to 4 documents with that. If you go with our standard loan, it's much more complicated that you have to go through and have it. And in Florida, these are the fees that we charge, and it's just based on the state statute. So the UCC filing, we don't charge loan origination fees. And then in Florida, you have to pay Florida state income tax, and that's $24.50 is your max. Again, that's Florida. Other states don't require that. So with that being said, that's a thank you. And here's some additional material if you have that I have out there. So do we have any questions that anyone has? You're awake? You're not bored? Do you fall asleep? You need any more bad jokes? How does a snowman get around town on an icicle? Okay. That's okay.
I've had a couple questions in the chat that I was able to answer, so we're all
Okay.
good from our perspective. So Peggy, we're going to turn this back over to you. Thank you, Tom, for an excellent class. Appreciate the participation. I hope everyone learned something and was able to take away. I put my information in the chat, and Peggy will provide all of the sponsors and Tom's information after the class. Peggy, you're on mute.
She may be frozen. So I'm mute. While we're waiting for Peggy to come on, I listed 2 of the books that I have there. One's on burnout, one's working from home, making it work for you. So maybe that'll help you in the future. Okay,
Okay.
Peggy.
I'm sorry, my computer froze for a minute there. Okay, well, great. That was great information, Tom. I know the associations are active right now. It's budget season. You guys are planning for 2026 even and beyond. So I will have their contact information on the sponsor sheet that I send out. So I want to say thank you again to everyone, Tom, Jayme, and sponsors and the guests. Here are the upcoming courses that I'm going to be having with an announcement about a trade show. December 4th, I have a company, Socotech, coming to speak. They are partially owners' representatives and also engineering. And they are also very active in the community in South Florida, at least. I'm not sure if they're all over the state or not, but they're going to be speaking on project management. I also have on December the 11th, there's a trade show, the Cooperator Trade Show. It's an annual show each year at the Fort Lauderdale Convention Center for all of the South Florida people. December the 9th, I have Sherwin-Williams coming in. They're going to give a presentation on the latest and updated information on painting products. December 16th, I have a 2025 legal update class coming. Very important to everyone that's a board member. Rosenbaum PLLC will be putting that on. Rosenbaum PLLC attorney firm. And then on January the 29th, I have some others coming in between, but on January the 29th, mark your calendars for a reserve advisor presentation on reserves. So that'll bring you into the new year. Remember, this is a 1-hour class. Your CE credit will be posted to all of your managers out there within a couple of weeks. And also, I'll be sending out the recording. So thanks, everyone. Trick or treat. I hope you don't eat too much candy, but enjoy yourselves. Thank you.
Thanks, Peggy. Thanks, Tom.
You're welcome.